Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Monday, the 9th of September, 2019, about 2:40 p.m. Central Daylight Time. Well, as you can see, you had a good rally in the wheat. In fact, on the charts, it looks as though this market wants to even possibly make a run a bit higher, but that's chart action. Remember what we have this week. We've got on Thursday the USDA report. We're going to see supply, demand, where everything's sitting. Then we're going to get a better idea as to what the yields look like. A lot of traders aren't looking for big changes on that. Corn still lower, beans unchanged. Cotton getting a little more of a rally, pretty close to the day's high, in fact. And on the energy sector, I always talk energy because of ethanol and the like, that market's getting a big boost today, as these are the best levels we've seen in a while. We've got a lot of heat in the south that's moving up the East Coast, and as that happens, you're getting that late summer demand for more nat gas. The stock market, pretty mixed day. You've got the Russell up with the Dow, and then you're down in the NASDAQ, and you're down in the S&P. The dollar index is down about 10 points as well. So as we come over here to the weekly chart of closes for soybeans, you've been staying under the 18-week moving average of closes that you could see, which keeps the market in a relatively downside bias. The resistance back to 868, and I consider the word bias determined by the closing price in relation to the 18-day average. If it's under it, downside bias; over it, upside. Couldn't ask for anything simpler. Then we get over to this daily bar chart where we've been fudging with this bottom line that's supposed to offer some idea of support. And what we've had overall is a downtrend line that the market has rallied up against over here and back here. So these are the 2 points I'm connecting, and that point, and just saying, okay, I can see the downtrend line in the market. Now the question is, what does it do with this? I don't know that it's going to resolve it with any meaning until we get after 11 o'clock on Thursday when the USDA report comes out, if then. We're still at September. We've got to get the first real yields in to look at anything. It's only September 9th. Most harvest isn't going on in soybeans. In the swing line factor, you're nowhere. You have a higher high and you have a lower low. That is not a trend. You have a market that's broadening out. That's what's been going on. As we look at key moving averages, they're lined up bearish. You've got the 18-day moving average under the 100, the 100 under the 200, and prices under all of them. That's a bearish act. Where's the market finding support? Where it's been finding it. Look at the lower black dashed line. That's called a Bollinger Band. And the idea behind the Bollinger Band is that as an algorithm, it's designed to keep the market trading within that number 95% of the time. You want the market to be able to hit it and exceed it to the top or downside. Also, you have more or less sideways action going on in the market where you're not following through, be it to the upside when you try to break out or to the downside when you've recently broke out. However, the overall pattern has carried the market to lower, not higher levels, that we also saw it on that chart when I showed you the declining wedge. When we look at momentum as measured by the slow stochastic study, it is pointing down. And this is my favorite momentum study. A lot of people use MACD. I get it, I appreciate it, and I understand it. I happen to like this one. What can I tell you? Some people like a dark jacket, others like a brown jacket, lighter. It's just the way it goes. But in looking at the market, we'll say the bias is down, momentum is down but oversold, and you've hit support zones that you keep bouncing away from. In the meal market, we have a pattern here where I don't know if I've got this right or wrong. I might have done this wrong. 301.60. Then we get a rally to 320 and break down. I have it wrong. This line should be pointing down with this one. So we should have lower highs, lower lows. We keep hitting the lower Bollinger Band and dropping down and failing against this 18-day moving average of closes. So we can see where the resistance is coming in. We can see the support. The market is in oversold territory. In the soy oil, the market caved in. Now, what do I mean by that? If we come back here, we were getting a contra-trend move. You had a big decline. You're getting a move back up. I say it's contra trend. I could use the word contra bias because it's staying under the 18-day average of closes in red. The market starts slipping back, finds some support against the 100-day average, which puts the market in between, and this was Thursday's action, in between the 100 and the 18. The market gets an attempt at a bounce on Friday, misses the 18, still hitting that 100, and today it's a collapse right into almost that lower Bollinger Band. So the trend down, the bias down, momentum down, and oversold. I consider any reading under a 30 level to be oversold in the slow stochastic. When we come to the corn market, it's still been a bearish move. Now, admittedly, I was in an elevator weeks ago, back here, obviously, when all the traders were wildly bullish. And from that point on, when you get one-sided and that's all they're talking, this market has come down. I wish I could tell you that I'm hearing they're all overly bearish. I'm not hearing that yet. I want to hear that really get overboard, but I'm just not hearing it yet in there. And believe me, this is the Board of Trade, so there's a lot of traders in this building and still plenty on the floor doing option trades, not futures. Lower high, lower low, into a support zone. The difference here is when you have an embedded reading. Embedded means that both numbers that make up the momentum index of the slow stochastic are staying under 20 for more than several days, and that's what this did. Even this rally didn't take it out of that. That means you can keep pushing on that number to take it down. When the red line closes over 20, it's generally, the word is generally, the end of that part of the phase of the market. Well, this phase has carried this market down for all purposes $1 a bushel from the May through July time frame. That's quite a bit. When we come to the wheat market, the reason I started this off saying the market acts like a market that wants to lift a bit, you have higher lows, higher highs. This is the first close in quite a while, back through the beginning of August, that you've been over the 18-day average. Now, if you can get follow through, that's the key word. If you can get it, maybe you get to the upper Bollinger Band level of 484. Take out Friday's low of 360 and a quarter, and it's just going to be another failure on the chart. The difference this time, you have bias up, you have momentum up, you've got the trend up. In the October sugar, you are still staying under that 18-day average, and until you get over it, this trend stays down, it's embedded, still locked into the bear side. In the coffee market, what happened here is that we started going sideways. Do you see the difference here as it starts happening in the bottom line and right through here? Now, this was Friday's action. With Friday's action, you had a lower low, you came up, and you followed through today. The first challenge of the upper Bollinger Band is what I teach, where I think the pros, be it the upside or the downside, the first hit of it, is typically where they take money off the table. And that's what I think went on today. We'll see if we get any follow through. The market certainly has momentum to the upside, but the reading's over 70. Any reading over 70 is overbought. You have to get both numbers over 80 to get that embedded reading for several days. You're nowhere near it. And so I have an overbought market, hit an upside target, and the trend and bias are up. In the cocoa, you've been fighting a battle at this upper Bollinger Band area. From the first time you hit it to where you're at right now, not a substantial amount of difference. You closed at 23.04 today over the upper Bollinger Band, meaning that that's one of those 5% of the times that you close over the band. The trend is up, the bias is up, the momentum is up and overbought. In the cotton market, this market is just chopping traders as we're getting what I call classic action in the sideways to tell us what the next move. And when it comes out of here, it could be rather substantial. If you look back over here on my shoulder, you had this type of move here. And then the market started a pretty serious decline that has lasted for quite a while overall, had trouble all the way through at the 18-day averages it's having now. The difference is it's in a retransformation. After coming down all this way, now it's trying to figure out what next is going to happen. In the cattle market, still bearish. And you've got large problems. Today I was talking to our cattle hedge people, and they were talking about what's going on in the Tyson plant and the impact of the feedlots there, and then of course the stock cattle. And my argument against them, if I owned a feedlot there and I didn't have to worry about stock cattle, in other words, I'm buying them from the local stockers, so to speak, why would I keep operating at about a $250 unit loss per animal? I just won't take any in after whatever I have. Let that plant reopen. But Tyson's been picking up this, if you will, the shipping costs, as I understand, on a number of these animals, but they've said that's going to stop. So I think it keeps pressure on this and the feeder cattle in the meantime. Lower highs, lower lows, momentum pointing down, but admittedly, you hit on Friday, you got to 129.17, right under the lower Bollinger Band. You challenged it today, came back and finished the day out still under it at 129.82, and that number's 129.96 and a half. So you didn't stay under it by very much. That is not a bull sign. It is a sign that you've hit a zone that people are taking some money off the table. Last in the hog market, still pressure on the market. You ended up taking out this low. Prior to today, you still had the pattern where we had come up in a contra-trend rally back to the 18-day average, and now the question is, what does it do from here? You can see the sideways action that's starting to develop in the Bollinger Bands. It's still fighting the 18-day. Last Tuesday, you're getting a bit of an attempt at more of an upside. You're instantly overbought. Think back on some of the grains we talked about. Now you're up to the zone where you've got to really get nervous. You got up to 6,800. You're just a fraction away from that upper Bollinger Band, and boom, back to the 18-day average, and today with the lower and low. So that's how that worked out. Linn Associates puts out what I think is just some of the greatest research on the grain and meat markets. So if you're serious about that, we've got it. Then if you're a soft commodity trader, well, what about that? We cover it. In fact, we have some of what we think are the better people, and we also put it through our charting software as oral commentary. It's not what we're sending out as emails or putting through as written reports to our accounts. I want you to see what happens and how it works. Now, if you missed the oral commentary, it's right there in our trading platform, so you can look at it. If you have an iPhone or a Google phone or any of the smartphones, you can also view all this on your smartphones. So you might want to go to our website at www.iraepstein.com, look for our free offers. When you're in there, look at the charting software. I would click that off. Next, look at this research. You might want to take a look at that and choose the categories you want when you do it. Plus, you can click up here and it'll take you right to that page. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow. Take care now.